Good morning, folks. Good morning. Your boy is a little rusty. I'm a little rusty, and the reason is I listened to my and rewatched the YouTube video of yesterday, and that was not the smoothest. I have been gone for a couple months, but now I'm back. But I need to get back into it again. Like I said, a little bit rusty, but we're fighting our way back into the YouTube algorithm. So yeah, help me out and like and subscribe and click on the bell, click on all so you don't miss anything. Already got a few very good comments on my previous YouTube videos, so thank you guys so much. Love you all. And in today's video, I'm going to show you why I flipped my bias compared to yesterday. So no, I'm not flopping and groping, but I flipped my bias, and I'm going to show you exactly why. But before we do that, let's first address the elephant in the room. And that is a few very obvious things. So these are the three major trades, right, that we looked at yesterday. And we said we have these two liquidity levels here at 60,800 and then at 57,500. And I said a liquidity grab of either of these levels is for me a long. That is a long here, and that is the second long here. And if we eventually go then to the golden pocket, that is my short trade. Also at the same time, you see this thick blue line right here. That is still the 50-day EMA. We closed Monday underneath. Tuesday we are underneath. Wednesday now again we're underneath. Weekly still needs to be closed. Of course, it'll take a couple days. So in that sense, yes, that is bearish. You have here a very big volume profile. It shows you exactly where the most traded volume is. And also here we are trading underneath the value area low. Also that thick blue line. That is also bearish. So that is the two elephants in the room. Let me take this one out. However, so now and then I also look at the social media of some of the other pencil necks, really those moon boys who have absolutely no idea what trading is or how it works. They just long and hope that that everything goes up. And slowly but surely now I see more and more people looking at these two levels. So maybe they're stealing other people's TA, or my TA could be, I have no idea. But these two levels, these two liquidity grabs from 60,800 and 57,500, they're getting a little bit crowded trades. They are now slowly becoming obvious. We're now a few days further after kind of the dump that we have. So people are looking more towards the downside, like, hey, where can we go before we go long? So these are getting crowded trades. I also saw already that a lot of people put limit long orders underneath these levels, with the idea that if we start dumping, their long orders are getting picked up and then we're going higher. Usually I don't like these kinds of trades. Like I said, they're crowded, because that means A, we're just smashing through, or B, we are not hitting it at all. So the most obvious trades are not the ones who are then really play out, but it is usually the scenario that not a lot of people think of. So then I thought to myself, okay, so which scenario would A, wreck most of the traders, or B, leave most of the traders on the sideline? And that is actually if we're not going lower, but we're going higher from here. And that would be very weird, because everyone's looking at liquidity, and also these lows. We're going to zoom in a second, and then you can see what I mean. But we're going higher from here. Is there a reason or a bias to say we are going higher? Yes, there is. Two reasons. If we're looking at the funding rate, and this is right now live, this is the funding rate for Bitcoin across the board. And you can see here that for most of the exchanges, we are slightly in the plus. When we had that major run to the upside, here there are even a few exchanges where it is negative. When we had that major run to the upside, this was super high, and that means very high funding rate. The longs are paying the shorts. There is a more than majority long than there is short. But if that is like the current numbers that you see here, that means it's pretty healthy. If there's a minus in front of all of these numbers, that means there are more people shorting. In other words, this is actually a very good base for us to go higher. Then we have another reason, exhibit B, and that is here the price and CVD. The only thing you need to know now is that CVD says are there more longs or shorts, and price is just of course price. And you see here, this on the hourly, that CVD is just going lower. However, Bitcoin is not making new lows. As a matter of fact, we're making higher lows. What does that say? Retail is selling heavily, but there are very big wheels underneath the price here that absorbing all these sell orders. They are filling their limit long orders. So all the retail here is shorting, but price is not going lower. And you know that they're shorting because the CVD is going lower, but price is unable to make lower lows. And therefore, actually, eventually, the sellers are done. They sold all of their back, and then we usually shoot to the upside. So we have a very bullish CVD here and a very strong case to go to the upside. Now, let me say just one more thing before I'm zooming in. Of course, I could be wrong on what I'm going to explain you right now and why I flipped, but if one of these trades will present itself, of course I will take the trade. I am just making always 4, 5, 6 trading plans a day. Then one of them play out. That is the trade that I take. And it doesn't mean like, oh, you're going long, oh, you're going short, but yesterday you said this and today you said this. No, we're making a couple of plans, couple of ideas. Whatever we see at our level with our confirmations is the trade that I'm taking. I'm not going to wait endlessly here for that golden pocket. If we just start dumping down lower, then I will just ride the wave to the downside and I will get myself into a short because that golden pocket might never be hit. The other side as well, if you get here into long, you want to flip here on the golden pocket to go to a short, maybe we just keep on pumping to new all-time highs. Why would you then get into a short if your confirmations are not met at the level, alright? So that's just what I'm trying to say. I hope that we're going higher because I think it will wreck most of the people. Okay, let's zoom in here real quick to the 15-minute because this is actually now where the action is. Yesterday, I did not take a trade on Bitcoin because I was waiting for these ugly lows here to be taken out. Let me quickly hide this. This was on the macro earlier. We don't need that right now. And actually, I didn't like these lows right here. We're now on the 15-minute. It looks a bit weird and we have this low right here. So I was actually waiting for a big drop to the downside, quick reclaim, get into a long and then just ride it to the upside, but we're not getting it. If I don't see my confirmations, I'm not taking a trade. So the entire day yesterday I was on the sidelines. And with now that bullish CVD just building up, I'm thinking to myself, is there another moment to get into a trade if this was already the low and we're not taking it out? Yes, there is. And let me just quickly clean up the chart right here. I like the idea here of the golden pocket. Right now we are just front running it. So what I'm hoping, and I'm going to upload this video right away, is that we are going to dip lower into this golden pocket, 62,700 to 62,800, or maybe even the 78.6, and then we're doing something like this, and then eventually we're going higher. I will long this. This is a little bit tricky though. You need some experience because textbook says you need to put your stop loss underneath these lows. And as I already said, these lows look a bit weird. They look a bit weak. So they're actually primed to be taken out. But like I said, it would wreck most of the traders because everyone would be waiting for these lows to be taken out to not take them out. What I usually like to do in this kind of scenario is that I'm just waiting for price to form kind of a low, and then I'm getting in and I'm putting my stop loss somewhere here. So not completely underneath these lows, but somewhere halfway. This will save you sometimes 0.5% of a stop loss, and that could be quite significant if you're also trading on high leverage. So that is usually what I'm doing. Wait for some structure to form and then get into the trade. As like I said, stop loss underneath the significant low. First take profit should be these highs, and then it's going to be now or never for the price, because then you're entering again that 50-day EMA, and we right ahead at the exact same level. Also the macro value area low. So reclaiming that level would be very nice. There is another incentive for us to go higher, and that is that we are constantly slowly grinding lower. Here, 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 and here. And you have seen me talking about this a million times, and that is liquidity, liquidity, liquidity. I've said this a million times already. People are putting their people are putting their stop loss of their short above these highs. So if we're now just pumping higher, to close a short you need to buy back, so that is technically a long, and therefore you have a buy, and you could see price really fast doing boom, going higher, and yeah, that could be a major trade. Another very big TP would then just be to pull a fib retracement from these lows to these highs, and then you see here approximately 68 500-ish, which is also, what a coincidence, just above all of these highs right here. So then liquidity is taken, and then you reside here for a little bit, and then eventually you need to make a choice. Are we going higher? Are we going lower? But that already would be a major trade setup. We're talking here about approximately 10%. Well, that could be a super trade. Again, guys, if we are going lower, if I'm wrong, that is fine. Right now, I'm not in a trade. I'm still waiting. I need to leave right now, so I quickly just wanted to make this video and upload it for you guys. I need to leave right now for approximately an hour, so please don't pump the price without me, and I will be back just before New York Open. Yeah, if we are going lower, we take liquidity. I see what I want to see, like a quick SFP reclaim. Of course, I will take the long, but right now, this would be my absolute preferred scenario, to leave everyone behind who is waiting for these lows to be taken out, who is waiting for the liquidity at 60,800, who is waiting for 57,500 with their long orders, and then just slowly grind higher and eventually really accelerate and take out all of that liquidity. That will be it for now. Hope you like the content. If you do, then please do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram. Both of those links you'll find in the description. And see you guys very soon again in the next one. Bye bye.